And how much do you think it really matters about the interest rates if we get any kind of lowering?
Well,
I mean, it doesn't appear to be right now. I think
No.
they're going to stay where they're at.
that's
Even.
actually really interesting, and that's something that the contrarian. Um, so this guy that's been one of my mentors, he's kind of really helped the Axis Alive group see the macro picture more clearly. And what the Fed is currently doing is a form of quantitative easing, but it's just not called rate cuts. And what they're doing is they're decreasing the rate at which they're decreasing the money supply. So let's say that in English. So they were taking, I can't remember the number of billions of dollars that they were taking off each quarter, but the amount of money coming out of the supply or the M2, it's not as much as it was before. So they're actually easing from the perspective of they're taking less financial energy out of the markets or liquidity out of the markets. And so you could actually track this liquidity cycle, and it's happening on the back end instead of it happening on rates. So yeah, rates are remaining elevated, but they're allowing there to be, they're allowing for the reduction of money in the circulating supply to start to bottom out and go sideways and round out and flatten before, which is a form of kind of easing before the whatever happens with rates later on. So it'll actually be like a compounding effect where, so this has been happening. This was announced, I think, 3 weeks ago, maybe 2 weeks ago. So this is pretty.
Was that the buybacks that I saw?
Yeah, it's that repo market, right? So, so they're actually doing it somewhere else. It's like they're saying this over here, but they're doing this over here.
Right.
And so, you know, in any event, that's all bullish for risk assets, and you know the stock market's reflecting that. I haven't looked at the stock market today. Let's do it together here, because the reason why the stock market matters is because it's got such a high correlation with Bitcoin, especially the NASDAQ. Let's see. So yeah, look, this looks great on the weekly here. You had a bullish hammer. What is today? Middle of the week, Wednesday. So yeah, I mean, if this green candle closes above this red body here, this is an index of indexes, by the way, folks. So I'm not showing you the S&P. I'm showing you 4 stock indexes all combined into one chart, and I think it's valuable for seeing a bigger view, wider lens, bigger picture view of what's going on with the stock market. But so, I mean, you could like assume that, and even if this market comes up here and makes a lower high and comes back down to make a new low, this is just a typical ABC correction to come back in to test the highs. And that's all healthy. And this kind of supports that bear case, short-term bear case for Bitcoin. This is bullish action, and this hammer candle can't be messed with, really. I mean, a weekly is not as powerful as a 2-month candle. Like a 2-month candle is going to be a lot more powerful than a weekly candle, clearly. But this bullish hammer, last time it resulted in 1, 2, 3, 4, 5 weeks of sideways and up for these markets. You got that one right there. And so, you know, I think stocks, they're gonna, you know, chop or go higher. Bitcoin's gonna chop and or go higher. To what extent, with what amount of force, I think remains to be seen. But we're in a bull market, and my base thesis is buy the things you like. Don't try to sell and buy back lower because it's risky. It's better to be in the market than out of the market. This is all stuff that Steve Courtney talks about, and I agree with him. I mean, I've been telling you, the guy's a genius. He's been very accurate calling the bottoms. And you know, there's something else brewing, not just in the stocks and Bitcoin, that's kind of saying like, okay guys, this is going to be a period of chop, but we're still bullish going into 25 and potentially even longer. Even last time I was on your guys' show, I was talking about 2026. Yeah, potentially. And I think that might actually, it's becoming clear that that's a real possibility. Here's the dollar chart. And so what dollar is most tied to, and why this matters anyways, is like if the dollar is going to go down in value, usually that means good things for crypto. So, I mean, this is the Bitcoin bull market in 2022, 2023, the bottom, and then the rip up to like the in the banking crisis, and then Bitcoin at 25 to 32K, then that sideways action. And then, you know, this was the next leg up with the ETF. So when the dollar's going down or sideways, like, it's been good for crypto. And I mean, that was same true here for last bull market, and then the 17 bull market, and then for the early stages of the 16 bull market. These big downswings, Bitcoin always moons. So the question then becomes, with this sideways chop period, is the dollar going to try and go a little higher, make a lower high, get stopped out, and then just reject hard, which is kind of what I think is the best case for the dollar? Or is it just going to flip over and die here at this level? It's definitely got a lot of like sideways action here and build up. And so just on the technicals alone, I don't need to know anything that's going on the back end with the dollar necessarily here, just that even in the case where it makes new highs and goes higher, you could get a double top, you could get a cup and handle, which this would be good for crypto. The rejection here would be good for crypto. You know, there's so much money in the system. It's all good for risk assets, I think. And the reason why that oil chart matters is because usually you can see the similarities in the price structure here. Kind of got that same choppy W pattern. You know, it has held these levels, but to me, this seems like a bear pennant, something like this, where it could actually just like fall out of this to the downside and go test that like $44, $48 a barrel oil. And so, you know, if this happens, it's gonna be part of the what do they call it, the oil dollar combination, like the demise of that short term, which would be amazing for our crypto
Gas
space
prices.
and for right. The cheaper gas prices is good for the economy. Obviously,
Yeah.
it makes less friction, more economic data comes in is good and stuff like that. So